Good afternoon, friends. We're about to begin the press conference by the Governor of the Bank of Russia, Elvira Nabiullina, and the Deputy Governor, Alexei Zabotkin. And we shall start, as always, with the statement by the Governor following the Board of Directors meeting. Please. Good afternoon. Today, we made the decision to raise the key rate to 19% per annum. As a result of our earlier decisions, monetary conditions have continued to tighten in recent months. The expansion of lending has slowed down somewhat, primarily in the retail segment. However, inflationary pressures have not been easing. Underlying inflation is higher than the rate needed for returning to the target next year. Today's monetary policy decision will give a stronger impact to a decline in inflation. We hold open the prospect of increasing the key rate further at our next meeting. I would now dwell on the reasons behind our today's decision. Firstly, as regards inflation. Price pressures remain high due to both underlying and volatile components. Most measures of underlying inflation are still in the range of 6 to 8%, which is intolerably high. As to volatile parts, the most significant pressure has been exerted by fruit and vegetables as their prices were falling this summer to a less extent than usual. Moreover, at the end of summer and in early September, some more important visible items frequently purchased by households, in particular petrol and dairy products, were becoming increasingly more expensive. This might be fueling inflation expectations even more. Taking into account recent data, we expect that inflation is likely to exceed the July forecast of 6.5 to 7%. We'll adjust it at the core meeting in October. Tight monetary conditions are facilitating the deceleration of inflation. As a result of our earlier decisions, the expansion of retail lending and the part of corporate credit that is less tied to government demand has slowed down. We are confident that inflation will be decelerating. However, as for now, the current monetary policy has not yet become sufficiently restrictive to bring inflation back to the target next year. What are our concerns? In the first place, our concerns are associated with inflation expectations as they have been rising among households for the fourth consecutive months. Businesses' price expectations have increased as well, especially in retail. According to our survey, analysts have shifted the period of achieving the inflation target to 2026. This growth of inflation expectations makes it more difficult to produce a disinflationary trend. Our second concern is that the economic growth is unbalanced. In other words, the dynamics of demand do not correspond to the capabilities to expand the supply of goods and services. This is in particular what elevated inflation is signaling. Hence, let us take a closer look at the economic situation, specifically what is limiting supply and spurring demand. The labor market is still in the main supply-side constraint, hindering the increase in output. The unemployment rate has dropped to a new historical low again. According to surveys, the share of businesses suffering from staff shortages has remained high. Indeed, we can observe that the rise in wages has slowed down somewhat in recent months. However, it is still faster than the growth in labor productivity. The slower growth of the wages does not mean that labor shortages have eased, as companies' staff costs have been rising, although in other forms. As reported by our regional divisions, enterprises have been hiring employees from other regions increasingly frequently, covering their expenses on accommodation and transport. Moreover, many businesses have been expanding their social benefit packages. Problems in logistics and cross-border settlements caused by sanctions have also been limiting the supply of goods and services in the domestic market. Moreover, amid the weak external demand, all companies have reduced output pursuant to the OPEC+ agreement. Now, I am going to speak of domestic demand. Although the increase in consumer and investment activity has slowed down, it remains high overall. In September, the Present Situation Index of the Business Climate Index turned negative for the first time this year. This is one of the signs of a deceleration of economic activity. Nevertheless, it is worth noting that expectations expressed in the course of the survey suggest that companies remain very optimistic about the future. In other words, businesses might consider the current cooling of demand as temporary. The key question is what caused a slowdown in economic growth. Was it driven mainly by the cooling cooling of demand or by supply shocks. If we find out that these have been primarily supply shocks, especially long-lasting ones, this will mean that monetary conditions should be tighter. We will need to further adjust demand to the limited capabilities to expand supply of goods and services. Since our previous meeting, monetary conditions have been tightening further. The financial market has responded to the July revision of the key rate path. Yields on short-term federal government bonds have risen more than those on medium-term bonds, whereas yields on long-term bonds have declined. This suggests that market participants have lowered their long-term inflation expectations. The credit market has also responded to our previous decision. The expansion of lending has slowed down most notably in the retail segment. Alongside the key rate, it has been influenced by other factors, in particular by changes in the terms of subsidized mortgage lending programs and the tightening of macroprudential policy. Corporate lending currently continues to expand fast. As a result, in July-August, the growth rate of the overall loan portfolio has not changed significantly. The situation where the dynamics are uneven across the lending segment is normal. We do not expect the key rate to have the same effect on all market segments. It is important that in order to reduce inflation, the growth rate of overall lending should be more moderate. Now I would like to speak of external conditions. The expansion of the world economy has been slowing down, which is generally in line with our forecast. This process is especially evident in the industrial sector, while the services sector demonstrates better dynamics. Overall, the structure of global demand is becoming less energy-intensive, which might restrain the demand for Russian export goods. The current decline in crude prices is related to both the structure of the global economic growth and expectations of its further slowdown. These trends in the oil market are pro-inflationary for Russia. Lower prices for the main Russian commodities have entailed a slight contraction of exports in July and August. Concurrently, imports have remained at the same level, therefore the balance of foreign trade has shrunk. Importers are still experiencing problems with cross-border settlements. Alongside the key rate, these difficulties might be limiting the growth rate of imports amid high domestic demand. I would now dwell on the risks to the baseline forecast. The main internal risk is the full utilization of available production capacities and labor force. In this situation, any further stimulation of demand will only be causing price increases without growth in output. Moreover, there are still risks associated with inflation expectations that might get entrenched at a high level for a long period. Finally, another pro-inflationary risk is a possible rise in geopolitical pressure and a more notable deceleration in major economies. This might entail a decline in the demand for commodities, which will in turn exert pressure on Russian exports and consequently on the ruble exchange rate. An essential factor in our decision-making is fiscal policy. Changes in the structure and amount of budget revenues and expenditures, the budget deficit and the pace of fiscal policy normalization have a strong influence on demand and, accordingly, on our decisions. We will take into account the three-year budget configuration when updating our forecast in October. There are also disinflationary factors that might materialize over the forecast horizon. In the first place, this is a faster reduction in demand and a more considerable increase in the economy's potential and labor productivity. Winding up, I would like to comment on the future path of the key rate. We consider it necessary to return inflation to 4% next year. To ensure this, we are ready to maintain tight monetary conditions for as long as needed. We are also ready to raise the key rate further. Why is it critical to return to 4% instead of putting up with 6 or 8%? First and foremost, this is essential to guarantee protect the household savings and incomes against depreciation. The second reason is that long-term loans are affordable only when inflation is low. When inflation is high, such loans, including mortgages, are expensive for most borrowers as their cost will include the inflation component. Third, when inflation is notably higher than in trading partner countries, the ruble is constantly weakening. Fourth, high inflation makes prices more volatile. The higher inflation is, the more difficult it is to control. If we put up with the price growth rates of 6 to 8%, the risks of moving to double-digit inflation will soar. In this case, regaining control over inflation would become much more difficult and expensive for society. Hence, the Bank of Russia will be doing its best to reduce inflation to 4% next year. Thank you for your attention. Colleagues, we're now ready to answer your questions. Please introduce yourselves and identify your agencies. Masha, please. Good afternoon. TASS News Agency, Maria Stepanova. I have a few questions. The first one, with regard to the options that were considered today, did you review keeping the rate as it is, or as it was? The second, about the new macroeconomic forecast by the Minister for Economic Development, which offers more optimistic forecast in terms of the GDP growth for 2025 to 27 compared to what you are showing. How achievable is what they are trying to call for? Thank you. During the board meeting, we had three options on the table: keeping the rate, raising the rate to 19%, and raising it up to 20%. But more substantively, we were considering raising it within the range of 19 to 20%, particularly after the statistics were published about inflation in August, over the last month period, full month period. So we substantively considered this step of raising it upwards. With regard to the forecast, indeed, our base forecasts are different. We make up our mind based on our base forecast, but one should comment that the Ministry of Economic Development's forecast is closer to the scenario which we describe as disinflationary. If you take a look at the main guidelines of the monetary policy, it comprises four scenarios, and so the ministry's scenario looks like our disinflationary scenario. Yes, there is a certain probability of it materializing, but we believe it is more proper for the monetary policy to be based upon more conservative assumptions. Colleagues, please, your questions. Masha, over there, please. Maria Filushina, Bitkogan. Currently, it is visible that the high key rate in the meantime doesn't lead to any major problems for the Russian economy. At the same time, isn't the Bank of Russia feel concerns that a long period of time with the high key rate may lead to an aggregate negative effect and a dramatic increase in insolvencies? And specifically, isn't the Bank of Russia worried about defaults and floaters? We continuously analyze the consequences of our monetary policy and its impact upon financial stability, upon the borrower's health, so to say. So I should mention that we do not see the risks to resilience for most of the borrowers, because there are always some borrowers with quite a heavy debt burden, and so for them, the key rate going up, particularly if it is linked to a floating rate, could represent a meaningful problem. But nevertheless, the majority of borrowers find themselves in quite a stable status, particularly over the past few years. The financial result of the companies representing the manufacturing sector enabled them to create a certain safety cushion. The quality of credit instruments to non-financial institutions, to corporates, is good. The NPL share is about 5%, which is a stable thing. As far as the risks concerned to the floating rate-linked loans, it is true that the share of such loans has grown in the corporate portfolio, and many businesses took the floating rate-based loans expecting a soon reduction of the key rate that they had to simply just wait for a short period of time. The banks were issuing such loans by pushing the interest risk towards the borrowers themselves. But nevertheless, most of the banks, they manage their interest risk not only putting it on the shoulders of the borrowers, but at the same time understanding that in a negative scenario, such interest risk can turn into percentage risk related to servicing the loans. So we're watching out for it scrupulously. But in the meantime, there haven't been any concerning signals, because indeed, the loans are being serviced quite well. There is a safety cushion in place, and the banks are capable of controlling such risks. Thank you. Colleagues, your questions? Artyom in the last row. Good afternoon. Artyom Govorun, Invest Future. I have two questions. Since spring this year, the Russian stock market has lost 25%. Doesn't it represent a subject of concern for the Bank of Russia, particularly since the stock market is believed to be an indication of economic mood? Many in the market also relate this decline because of the loop being closed in terms of the being able to move the assets which occurred on the 24th of August. So what's the bank's assessment of the pressure on the market, how long it may last? And my second question, the Russian president recently stated that one should fight inflation in the first place by expanding the supply of goods and services. In our case, lending was quite high, but the supply, because of the problems with the payments, remained low. So what's the status of it right now if you take a look at it through the inflation context? What impacts price growth more, high demand or low supply? Thank you very much for your questions. As far as the stock market, the shares, are concerned, various movements in it, I believe, have been the result of several simultaneous factors playing out. And as far as the one that you mentioned is concerned, where the loopholes have been closed for attempts to bypass anti-sanctional regulation and bring in securities from abroad, based on what we see, that produced insignificant influence over the stock market, whereas other factors did more, including tighter monetary policy measures, making the attraction of other financial instruments become more pronounced, including the money market instruments. Beyond that, we see that investors are adjusting their expectations of the future financial results of the businesses. Several reasons: tighter monetary policy, one. Second, assessment of tax changes impact, and the foreign market environment. Similar kind of an impact could have been from the revaluation of shares because of the dividend payout decisions. So there have been several factors that came into a single juncture. So we believe the overall stock market will be demonstrating stable development. As far as the second question is concerned, indeed, this is the key one. And I mean, what explains the economic slowdown? Is it more because of the demand or supply? And it's the balance between supply and demand that affects inflation. Where's the central bank have the toolkit to influence the demand? And so we believe that the restrictions on the supply side have manifested themselves. This is not only about the payment problems, but also, physical resources have been exhausted and labor in the first place. So it is important for us to be able to assess in the future what is the ratio in terms of the factors on the supply side and the demand side. Would you like to add something? Oh, I suppose it is worthwhile saying that, of course, the economic production capacities and capabilities have been growing, continue to grow against the tight monetary policy right now, because investments have grown since the end of 2021 quite significantly. If you compare it to Q4 2021, in the first half of this year, the level of investments into the main production stock have grown by 25%, which is almost a quarter compared to Q4 2021, which will definitely produce aggregate effect upon the labor productivity growth, better efficiency in the business processes, so the economic potential will continue demonstrating significant growth next year as well. Yes, this is a very important thing to add, that apart from restrictions on the supply side, there are certain factors which lead to a stronger economic potential and better opportunities in terms of the labor productivity growth. Next question from Krasnodar, from Artyom Permyakov, RBK Caucasus Internet publication. Artyom, can you hear us? Oh, I guess we've got some connectivity problems. All right, let's have a question from the room. Jan, in the first row, please. Jana Churechkina, RIA Novosti. I will have two questions. The first, to what extent, considering the end of 2024, the mortgage lending activity may fall, and for how long it would be more beneficial to keep one's money on bank deposits rather than invest them into any mortgage opportunity, and what kind of an effect that may produce on the economy. My second question, how can one solve the problem with cross-border payments into China? Because you have already referred to there being such a problem, so is there any decision that you can see to it? Thank you. In as far as mortgage lending is concerned, we believe that the end to a mass non-individualized program will lead to a more balanced growth of it without provoking such an intensive price growth. Based on our forecast, mortgage loans in 2025 will grow by about 7 to 12%. This is the forecast that we did in July. Later in October, we may adjust it and make it more specific, but we also feel after the components of individualized mortgage programs have been changed, the subsidized one is also growing in its volumes. But to make any conclusions about long-term trends is premature, because certain changes were made into it, and so like we used to say in the past, we should rather draw conclusions in the autumn, and we will keep on monitoring it. As far as cross-border payments are concerned, evidently, over the past few months, the situations with the cross-border payments is becoming more difficult, which brings about higher transactional cost, and against all other things being equal, this is a pro-inflationary factor that we keep in mind. But in terms of the measures that are being undertaken, like I used to say previously, we're not commenting on that. Let's try and hear a question online. Law and Finance Agency, Victoria Shergina. Hello. If I may, two questions. First of all, what is the way that the central bank may explain simultaneous slowdown of the GDP growth in Q2 2024 and the acceleration of inflation through the same period of time? And my second question, you mentioned that you believe it is necessary to go back to 4% inflation next year. But how real it is, and what kind of Q rate will be necessary in order to achieve it? As regards simultaneous slowdown of GDP and the acceleration of inflation, truly, this is the subject matter that we are currently analyzing. Principally, this points to the factors that produce the economic slowdown, whereas it were only because of the demand slowdown, then the inflation also would have slowed down. So we definitely see that there are factors on the supply side, but we will need to make an assessment of what effect they produce over on the economic slowdown side. I mean, demand factors against the supply factors. As far as the 4% inflation target is concerned, we feel that this is achievable next year, and we are pursuing the policy in order to make it happen. In terms of what kind of key rate may be necessary for that to happen, we will further identify the key rate path once we update our forecast in October, and we will come out and we'll share it to you. I mean, the one that is necessary within the base scenario in order for the inflation to go back to 4%. Thank you, dear colleagues. Elena Fabrichnaya. Elena Fabrichnaya, Reuters. You mentioned that you will update the path in October. Would you assume right now that the key rate may be more than 20% once you see the budget? My second question is, why haven't you raised the yuan swaps like you previously publicly stated? And my third question, currently the risks that the systemic banks are facing include 2 European subsidiaries of the European banks. Do you believe that they might disappear from it once the list of systemic banks is reviewed next time? And what kind of future do you see for them in Russia? As regards the key rate, we are ready to make a decision about the level of the key rate of the kind that is required in order for the inflation to go back to the 4% target, and we do allow for the key rate to grow during our next board meeting, and we will definitely take into account, hopefully the budget will take shape for the next 3 years by then, and we will definitely take it into account in our decision making. As far as the swaps are concerned, for the yuans, we see that during the past recent months, because of the problems that have been taking in the exchange market, yuan market, the banks started actively using the Bank of Russia swap as the funding instrument so as to close their currency exposure, and we do see that our transactions are taking place almost on a permanent basis. But the purpose for the central bank's swap instrument is to even out volatility. This is not a funding source. So to continue to increase the swap supply in order to act in an unusual manner for us, we do not believe this should continue. And in order for the swap with the central bank to perform the function of insurance, we made a decision and we raised the yuan rate, Toshibor plus 12%. I would specifically say that as far as rubles are concerned, the same rate remains, the key rate -1. We also intend to gradually reduce the restrictions related to this instrument. Longer term, we believe that we should continue our policy to reduce the currency denomination of the bank's balances. Why this reduction of the currency denomination has been taking place? Because recently the banks have been growing the volumes of their yuan-denominated loans, and the companies prefer to take loans in currencies, understanding that the ruble-denominated loans, in terms of the interest rates, were very high. So the process slowed down and almost has come to a standstill. So we believe it is important to continue to reduce currency denomination of the bank's balances. If necessary, we will apply the macroprudential markups instruments. Now, as far as the systemic banks are concerned, the list of those we are reviewing on a regular basis. We do that in the autumn period, but right now it would be premature to comment on what kind of changes may take place in such a list. Thank you. Colleagues, any more questions, please? Nastya, please. Yes, go ahead. Anastasia Savelyeva, Interfax. The World Bank has, International Monetary Funds, stated that it is eager to revive its consultations with the Russian authorities, which has been taking place since 2022. Are you ready to host the delegation of the International Monetary Fund in person? And do I understand correctly that your deputy Ksenia Yudao may leave her position with the central bank in order to take her position in the International Monetary Fund. Also, the European Central Bank is putting pressure upon the banks who have their subsidiaries in Russia, demanding that they reduce their business activity, and some of the customers are complaining about the complications they're facing with the banking service, including their capacity to perform cross-border payments. Do you see this very discriminatory approach? The central bank, as the national regulator, is in a position to advise the subsidiaries of foreign banks to act in a more loyal way towards the Russian customers and not to run head over heels, reducing their business activity in Russia. Another question, based on your conservative forecast in the economy for the next year, can one say that you allow for the overcooling of the economy next year? As far as the IMF consultations are concerned, yes, we do intend to hold them. This is an everyday run-of-the-mill, if not routine, thing. Let me remind you that IMF unites 190 countries, and that is the kind of consultations that they do with all of them. As far as the IMF executive director representing Russia is concerned, it is the Russian government that identifies the candidacy. It has already been cleared, but all of the subsequent decisions first have to take place. And now the second question about the pressure. Yes. The Russian subsidiaries of the foreign banks. Yes, indeed, we do observe pressure. We believe that the segregation that we see is impermissible. The subsidiaries of the European and other foreign banks in Russia have been set up under the Russian law. They operate in the Russian jurisdiction, and following the sanctions of the foreign jurisdictions contradicts the Russian legal system, discrediting those who do that. So, with that in mind, recently we forwarded to the foreign bank subsidiaries in Russia a specific notification which reject customers' requests for currency transfer or create technical obstacles on the basis of considerations which do not comply with the Russian law. We also forbade these banks to share with their parent organizations abroad the data about their customers, including personal data, for the purpose of creating some sort of list or white list, with the exception only of information without which it is impossible to effect a bank transfer or a payment. As far as overcooling risks are concerned, in the meantime, what we're seeing is overheating risks. Yes, I mean, not the risks, but the state of overheating. Alexei Borisovich was quite correct. So we do need a certain overcooling, because that would mean a more balanced growth rate. In order to avoid the so-called overcooling or recessionary risks, one should undertake timely measures to reduce the overheating, but in no way to allow this overheating to climb higher. That's the main recipe. Dear colleagues, let us try again to connect Artyom Permyakov from Krasnodar, RBK Caucasus Internet publication. Artyom, go ahead. Yes, hello. Elvira Nabiullina. Considering the labor shortages and competition for human resources, the businesses in the South region continue to raise wages to their employees. Can there come a time when businesses no longer will see it beneficial to raise wages? To what extent that might spiral inflation more? And what do you think about the massive inflow of foreign experts into Russia? Thank you very much for this question. It's a very important one about the state of the labor market. One should say that some businesses are already facing a situation when it is very costly for them to raise wages. And they're not as much as stop production, but more actively investing into automation and labour productivity growth. But throughout the scale of the whole country, we do note that there are such investments taking place in many industries at many companies, but throughout the whole country, these effects may manifest themselves step by step, because an investment cycle is stretched throughout time, and labour productivity cannot take place in leaps and in fits and starts. But this is the trend that we do see. Now, the demand for labour, we believe, shall remain high. And in order for the wage growth not to result in inflation, it is important for the wage growth to be commensurate to the labour productivity growth. I mean, to the extent that the labour productivity growth continues, and we do see that the investments are currently growing, they are aimed to improve labour productivity. The real wages, in this case, shall continue growing. As far as expanding supply in the labour market at the expense of the foreign employees, that may reduce tension in the labour market, but it is also very important to consider the skill set that should conform to the needs of the Russian labour market. Thank you, dear colleagues. Sergei, in the second row. Sergei Bolotov, the Russian Gazette. Could you please specify how radical may be your adjustment of inflation forecast upwards, 3 to 7, like the Ministry of Economic Development, or more? My second question about the exchange rate. Previously, the decision of the central bank on the key rate in terms of the impact upon the ruble exchange rate was quite noticeable, but currently it seems that everything depends upon the trading balance and the sanctions. Could you please tell me, do you continue seeing a significant impact of the key rate decision upon the ruble exchange rate? As far as reconsidering our inflation forecast is concerned, I am not going to quote any figures right now because we're going to review it in October. But there is a great probability that it is going to be above the upper threshold compared to the forecast that we came out in July, and that was, shall I remind you, 6.5%, 7%. As far as the impact of the key rate decision upon the exchange rate, effectively, it used to be quite noticeable, almost on the spot, because of the high importance of the cross-border capital movement, and there was quite a volume of non-resident present there, including in the bond market. Currently, there is such an impact, but it is more extended in time. I mean, to say that our decision about the key rate in the first place does affect the demand for rubles in relationship to imports, and through that it may influence the ruble exchange rate through the trading balance, but that is extended in time. Alexei Borisovich, would you add something? Well, maybe with regard to the forecast. Yes, indeed, because we review our forecast completely, because you cannot review just one variable in it, but in order for the inflation forecast not to be raised above the current range, it is necessary for us in September and October to see very notable slowdown in the price growth compared to what we saw in August, September, particularly in July, August, particularly in its stable components. Thank you, dear colleagues. Rita? Margarita Mordovina, RBK. The Bank of Russia analysts in their bulletin, what trends are saying, stated that very shortly certain prerequisites may appear which will point to the economic cool down and more stable growth. As far as you are concerned, do you support this trend of thought? What, generally speaking, must happen in order to strengthen the banks of Russia confidence in the economic cool down already starting? And what are the indicators that you follow that tell you about the cooling or heating? My second question about the yuan-denominated currency swaps. Do we correctly understand from your comment that the Bank of Russia will not offer any additional support in solving the problems with the shortage of yuan-denominated liquidity that the bankers are referring to? And can your swap decision somehow even out the spread that we can see between the yuan and ruble exchange pair as well as yuan-dollar exchange pair? As far as the indications of the future economic cooling down is concerned, we are watching out for a broad range of indicators: consumer activity, investment activity. From the point of view of consumer activity, apart from the incomes, an important effect comes from the retail consumer lending, but I would like to underscore it again. The rate of the aggregate lending in demand, its growth rate is very important, as well as the aggregate consumer lending, because it is part of the monetary aggregates. So there are certain prerequisites that such a slowdown shall occur. As data comes, we will be making up our minds in October. As far as the shortage of yuan is concerned, I would like to particularly emphasize that in terms of the yuan-denominated payment liquidity, it has not been there at all. Payments, both from the point of view of covering the needs to effect yuan-denominated payments, no issues. Primarily, those were the problems related to the closure of an open currency position. So we believe that an open currency position, once again, I shall repeat it again, must be closed not by swapping it with the central bank. As far as the spreads are concerned, they have truly been quite high on a certain period of days, but we see that the spread between the cross rates over the past few days has strongly gone down. Less than 1%, so we'll keep on watching out for it. Will you add something, please? With regard to the liquidity story, you have to draw a very specific threshold between liquidity and funding, because liquidity is an ability today, in order for the bank to make a payment in the currency that the customer is requesting this transfer to take place. Now, as far as the yuan difficulties are concerned, it is not with being able to transfer it. It is with the ability of the recipient to accept it. But the funding is about the structure of the balance. It's about the correlation between the specific currency denominated deposit as well as the loans issued denominated in that currency. And so, as far as this is concerned, the ball is over on the court of the banks in order for their lending activity to be fully compliant with their capacity to bring in liabilities in foreign currencies. Sorry, I overlooked to respond to the question about the overheating indicators. It's an issuance gap. I mean, the extent to which the GDP growth rate is higher than the potential one. And the main indicator is inflation. So that's the core indication of that. Dear colleagues, please, Ivan in the second row. Ivan Schliegen for MAGRU. Continuing the GDP forecast topic, many are interested in that for 2025 because there's a bit of a discrepancy between the Bank of Russia in its forecast and the Ministries of Economic Development. And so, quite obviously, the analysts are, picking up this, medley, the way they interpret it. Those who disagree with the policy of the central bank, you see the government is really leaning backwards in order for the economy to grow, but the Bank of Russia raises the key rate and tries to curb the economic growth. Definitely we will hear many comments like that in the future. How will you respond to that? In our mind, stable economic growth is impossible amidst high inflation. So reducing inflation down to the target values is one of the key measures in order for us to enjoy stable economic growth. I shall repeat it again. Only if this condition is met, we will have long-term, affordable loans necessary for investment activity, and we're specifically making our decision to raise the key rate for the purpose of avoiding the strength with which we exhale simply to produce a loud whistle rather than a real outcome. So we cannot allow for this to happen. Well, I guess that's the way it is. Mr. Zapotkin, please. If I may,
I shall explain. The Minister of Economic Development's forecast comes out of their vision of the monetary policy based upon our communications. It's simply that their forecast presupposes that against such a monetary policy that stabilizes inflation at a 4%, because their forecast for next year is 4.5%, economics will be able to demonstrate growth at 2.5% level, real GDP next year. To us, this is not the base forecast, not the base scenario, because we come out of a more modest assessment of the rate at which the economic potential may demonstrate its growth based on a historical experience. We believe that the economic potential next year is going to grow faster compared to what the average was over the previous 10 years, but not at the kind of pace which would provide the general pace of growth at the level of 2.5. But in our disinflationary forecast, basically, we point to a more generous prerequisite in terms of the potential growth, where the GDP growth range 2 to 3%, because that creates a much faster subsiding of the disinflation potential. Thank you. Next question comes from St. Petersburg, from Evgenia Gorbunova, Fontanka.ru online portal. Evgeny, go ahead. Good afternoon. The Bank of Russia is saying that raising the key rate is aimed at cooling down the demand. Through that, the economy cools down and the GDP is slowing down. But on the other hand, the regulators do note a negative impact of the key rate upon the economic development, irrespective of abnormal interest rate components in the investment spending. If that high rate does not deter, why? And at the same time, it may cool it down. How does that mechanism work? Slowing down the economic development as well as taking it out of the threat of any damage. Well, to cool down an overheated economy or excessive lending, it doesn't mean dealing a blow or creating a damage. It is necessary in order to create the opportunities for manufacturers to do more, to catch up the kind of demand that is way ahead of them, and slow down inflation. So high rates specifically prevent inflation. They prevent the unstable economic development. It doesn't contradict the investment part of it. Let me remind you that lending is not the most important source of investment. It's corporate own resources, and what we've been able to observe that the corporate profits over the past few years have significantly grown, and there is also a possibility to raise money from the stock market, from the shareholder capital, because this is very much untapped into potential. I believe this is the most important consideration. So it is most crucial for us to cut through that vicious circle. And I believe that we quoted the figure previously. On average, throughout companies, the cost to service their loans, about 5% of cost. In terms of overcredited companies, that may be more, but on average this is 5%, and so this is not such a big share in cost structure. A much bigger share in terms of spending that they incur on labor inputs, where price growth for inputs and materials, it depends upon inflation. And therefore, costs resulting from high inflation represent a bigger deterrence for business development if compared to costs growing to service in their ability to service the loans. Yes, please. And one should also underscore that the loan servicing costs, they grow temporarily, meaning to say, once inflation slows down, the interest rate is what we're going to reduce, and respectively, this part of the overall corporate cost structure is going to go down, while inflation pushes up costs, both for inputs and materials, resources and equipment. The labor, the wages, forever, irreversibly. That's the core difference. Another thing, the cooling down is about closing this gap, this overhang of demand over the supply's capacities, but the potential GDP shall continue growing. like the way I explained answering the previous question, on the basis of the investment activity growth that has already taken place. If even investments do not continue to grow, but simply because currently they're 25% higher than what they were 2.5 years ago, this level of the current investment activity should lead to a more active growth of its potential, which I believe is the only source of a stable and well-balanced growth. Thank you. Colleagues, Grigori in the last row. Good afternoon, Grigori Bajenov. Popular Economic Science Bulletin. My first question is about the assessment, about the cost related to interests. Could you please specify how have you come up with your statistics? Did the Bank of Russia use some sort of specific survey? But doesn't it seem to the Bank of Russia right now that it would be more relevant to talk not about the cost structure, but rather about how strongly one point of interest in raising might impact profitability and the margins rather than the prices, because we understand prices may not always directly relate to the ability to produce or perform. So it seems to me that it would be more important to talk not about the cost but about the profit margins. Would you agree to this point of view? And my second question about the dynamic discrepancy, which in the future may take very evident shape if the central bank continues to raise the rate, but at the same time is not able to impact the government decision with regard to, let's say, raising taxation in order to nip in the bud the current shortages on the part of the government, and the government may make a decision with regard to growing the sovereign debt. And this decision, the central bank, is something that the central bank is not able to influence. So certain problems may ensue here with this stronger vicious circle where growing the key rate may lead to a higher sovereign debt, and automatically that spirals into a certain cycle. And so it seems that longer term the central bank under such conditions is no longer capable of controlling inflation. So to what extent do you believe that this particular risk is substantial for the current period for the Russian economy? Thank you very much for your questions. As far as conclusions, about 5% of costs related to service debt. This information comes from the accounting reports from the businesses that submit their accounts to the Russian Office of Statistics. So 5%, looking from the top, because actual data was a little bit less than that. We took the data in between 2021 to 2023 with a bit of an additional variation. So the main source comes from the reporting data, businesses reporting data. And the next question, the structure, about the profit margin. Right. Yes, profit margin. Indeed, it was when the key rate was reduced, when the inflation was low. The manufacturers wouldn't reduce prices despite the lower interest-related costs. Through that, they were improving their profit margins. And out of that, they have geared up to have a certain, reserve in the profit margin. We have confirmation of that. And so the recent Russian Office of Statistics data shows, it doesn't show that there are certain problems with the profit margins. Over the first half of this year, profits didn't grow as much as it did last year, but by a certain considerable 14 trillion rubles. So in the meantime, we do not see any problems with the profit margins. As far as your second question is concerned, it is indeed a very important question. Yes, one may imagine a situation of a certain fiscal dominance when the key rate in many ways loses its effectiveness. But to my mind, we're very much far from this happening because we have a very low sovereign debt. And that is why it is crucial to maintain sovereign debt in a manageable proportion. Would you add something, Mr. Nabiullina? I would also to mention a couple of words about the profit margin thing. Undoubtedly, you are right that per a specific business case, its level of motivation to transfer additional costs into the prices depends upon its profit margin. That is truly the case. The businesses which are more effective, which have a bigger profit margin, they can absorb additional costs by allowing this profit margin to shrink. But as applied to the additional interest expenditures, what defines it? The level of debt burden, their level of sensitivity to the higher key rates. So the businesses which are having less debt burden are going to find themselves in a more competitive position compared to those who are less effective and have a bigger debt burden. And during the period of time when the tight monetary policy is being pursued, will definitely sort things out in favor of those who are more effective. And that is the outcome of a fair competition. With respect to the fiscal dominance, the basic foundational article about it comes from 1981, where the basic argument is listed over 7 pages, and the main thing that it describes is a very constructive one. The first statement is that indeed, in a situation of the budget fiscal dominance at a certain point in time, and specifically at the point in time when the fiscal system exhausts its capacity to finance fiscal deficits via growing the ratio between the government debt and during these periods of time, the monetary policy becomes more it faces difficulties in remaining independent, and so they basically assume that that's might happen. But towards the end of this article, the very last sentence reads approximately in the following way: nothing in our analysis doubts the ability of the monetary policy to continue maintaining the kind of disciplinary measures that may ensure a straightforward performance of economic agents. So under such conditions, the central bank, independent central bank, may achieve its inflation target over the perpetual time frame. And that is the conclusion from the first article dedicated to it, which was written 40 years ago. Thank you. Now, dear colleagues, Vera. Good afternoon, Russia 24, Vera Moroz. To what extent the instrument of the exchange instruments that are not within the exchange operation themselves may produce effective results, and how strong your expectations of stagflations may be? Well, indeed, in the exchange market, we had to change the methodology of defining the official exchange rate by being aware of various concerns amongst the market players in terms of how this exchange rate is currently being identified. We have published the methodology of calculating the exchange rate upon our website. It's a very transparent process. You can see it on our website. So we entertained the same kind of an approach that we had within the exchange transactions in terms of the average weighted process, taking into account the volumes. We take the data from the banking reports that is available to us. So we believe that this methodology is quite transparent, and it reflects on the real exchange rate under real circumstances. As far as the stagflation risks is concerned, I'm sure that all of the central banks are afraid of it, not only the central banks, but the government as well. Because if stagflation grows, it means that the economic growth is no more. So in terms of the shortage of labor forces, it is very important for us to avoid this scenario unfolding, and that is why we're making our decisions about the key rate, raising it, in order to prevent any prerequisites for this to happen. Thank you very much, colleagues. Marina, please. Marina Pimenova. Marina Pimidova, NTV Business News. As of July, the most massive subsidized mortgage is no more. The mortgage lending is slowing down, but the housing is still being completed, being sold. The costs to renovate is taking place. So, does the central bank take these processes into account as a certain aftermath? And if so, how long you believe it might impact inflation? You are quite right. A certain additional demand inertia related to the mass mortgage offering related to the already bought housing, because you need to basically outfit it and renovate it, make it livable. And so that aftermath, the way you describe it, for maybe a year and a half, 2 years, may continue, because it's the development and construction cycle should be completely run out. But I also believe in our decision for the key rate, we take into account the propensity of households to take such loans. But overall, the impact of such demand upon lending activity is not exactly the case like it used to be in producing this overheating, because the amount of money required for renovation definitely is not at the same level as when you purchase a housing. The second factor, which might have certain consequences related to the subsidized mortgage, it's not upon the consumer loans, but the corporate loans. It's when the developers either choose or use the project finance. From the accumulated escrow accounts, they get project funding. And so effectively, at the point in time when this project funding is being made available, money comes into the economy and impacts the aggregate demand. Thank you. Next question comes online from Ekaterina Titova, Bankiros.ru financial portal. Ekaterina, please. From Nizhny Novgorod, I'm sorry. Ekaterina, go ahead with your question. She can't hear us. Yes. Okay, let's take a question from the room here. Tatiana, please. Could you please pass the microphone over to Tatiana? Good afternoon, Tatiana from Kommersant. I would like to ask you a question about the state of the foreign sector. In what we're seeing in terms of the price going down for oil and commodities, how strongly that have affected your today's decision? Bearing in mind that you have already referred to pro-inflationary risks. And again, are we still within the base scenario, or is it a bit of a shift towards the risk scenario? Currently, we believe that we are still within the framework of the baseline scenario. But nevertheless, inflation certainly continues, and the stable components are above what we have in our base scenario. As far as the crude prices falling is concerned, the extent to which we need to take into account in our base scenario, we will revisit this issue in October, because we do analyze the external economic environment. That represents a pro-inflationary risk for the base scenario. We have specifically noted that. Maybe yet again we shall emphasize that the risk scenario is a very serious stress scenario. So I suppose that the world is not going to slide into it. This is the kind of scenario which is quite similar in terms of its configuration to the global financial crisis in 07-08, where the world has slid into very fast rather than gradually. Denis Yelachovsky from YouTube channel Yelachovsky. Denis, we can't hear you. 1, 2, 3, 4. Can you hear me? Yes, I'm speaking. Can you hear me now? All right. So I've got 2 questions, if I may. The assessment of the inflation expectations of the household for August demonstrated an interesting paradox. In between responses without savings, the inflation expectations and the observed inflation have gone down, although remaining high. Growth is only pointed by those who have savings. How the Bank of Russia may explain these differences? And my second question is again about the coordination of activity between the Central Bank of Russia and the government. In the base scenario, the central bank shows the GDP growth for 2025 is 1.5%, while the Ministry of Economic Development is 2.5%. So bearing in mind the fact that that the minister's forecast fits into the federal budget parameters. Is there any coordination between the central bank and the government in preparing such a forecast? If so, why is the difference? If not, what kind of the lack of such coordination may, threaten the economy with? And basically, do you feel the support from the government in fighting inflation, or you are just, a lone warrior in this battlefield? Well, first of all, coordination or interoperability in terms of the macroeconomic policy is concerned, yes, we have it. The government takes into account the decisions and the monetary policy that we are pursuing, and we are trying to explain with full transparency our rationale during the government meetings. In the similar token, we do take into account the government decisions in the area of the fiscal policy, as well as other measures aimed, amongst other things, at developing supply, because the measures to fight inflation, they do work on the supply as well as demand side. We impact the demand, the government impacts supply. We take it into account, and we do see that the government is very actively engaged in the issues which make it possible to debottleneck various issues, and as far as the production of goods and services is concerned, and aimed at increasing the economic potential, and that is something that we definitely take into account. As far as differences in our forecast is concerned, I shall remind you that this kind of difference practically has always been there if you take a look at the history, because the central bank has been pursuing its monetary policy independently and based upon its own forecast estimates, which we update at our core board meetings 4 times a year. The government has its own cycle of updates. We do take into account each other's work, and we prefer to base our monetary policy upon a more conservative assessment of the future economic dynamics. But yet again, I shall repeat it, and Mrs. Botkin mentioned it more than once, this scenario, which the Minister of Economic Development put into the foundations of its base forecast, is something that we also have, and we believe it is feasible, but that requires a further growth of the economic potential to make it happen. Thank you. Yes? Yes, I'm sorry, yes, inflation expectations. Well, inflation expectations, people without savings, amongst the people without savings, has always been stronger than compared to those who had savings, but dynamics can be different during different periods of time. Mrs. Abotkin, I would underscore that not only pro-inflationary expectations overall, with regard to any economic indicator, a separate month or changes within a separate month are not very informative. So whenever we update our forecast, whenever we analyze data that we put into it, and scrutinize certain other more stable trends averaged within a certain several months period. So with regard to specific Denise question of yours, indeed in August, inflation expectations went down amongst the respondents without savings, but they have strongly grown later on. They grew in July. I mean, such a growth was quite expected considering the indexation of tariffs for the communal services, utility services, to which this group of households is more sensitive. So August, you may say, a compensation for the volatility that demonstrated a reverse trend in July. But for both groups of households, if you take a look over the past 3 months, generally the inflationary expectations trend was a bit upwards, something that should not happen against a sufficient tightness of the monetary conditions in the country. Thank you, colleagues. More questions? Anastasia, in the 3rd row. Good afternoon. Thank you very much. My name is Anastasia Bashkartova, Independent Gazette. Well, nevertheless, we'd like to go back to certain details about the overcooling risks. Could you please tell us, based on your data, what is the time lag that the Russian economy is responding with to the key rate decisions. Isn't there such a risk that under conditions when the economy hasn't yet fully responded to the previous tightness, because a frequent rising of the key rate may lead to a negative accumulated effect and to the overcooling taking place one way or another? Thank you very much for your question. Our decisions about the key rate fully translate into inflation in the course of the following 3 to 6 quarters. That's what we see. But it doesn't mean that there is no effect during the first months. For example, we observe that the banks, like for example previously, our decisions about the key rate would first, it will take several weeks before they would change their deposit rates without mentioning lending rates. Currently, it takes place much sooner and faster, and that impacts households' activity savings and also translate into prices. Undoubtedly, the effect from the decisions which took place before today hasn't yet fully materialized. We're aware of it, we're aware of the time lags, and we do take this in our decision making. Thank you. Next question comes from Nizhny Novgorod, from Ekaterina Titova. The Bank Giros.ru financial portal. Good afternoon. I've got the following questions. If keeping the current requirements from the central bank upon the banks to lend to the household, what should be the average key rate so that the average market mortgage could go back to 8% interest? Have we achieved this level over the past 5 years? And if everything happens according to plan, how soon the inflation will go to 4%? Thank you for your question. Mortgage loan is a long-term loan, and long-term rates are defined not as much by the level of the current rate, but rather by the expectations on the part of the banks as well as the borrowers towards what kind of inflation will be and what kind of the key rate will be throughout this whole cycle while a loan is in effect. Let's assume that we would have lowered the key rate today down to 1%. That would not lead to similar reduction in the deposit interest rates or the securities yield profile. Because just think of it, if the key rate was brought down, you personally, would you agree to place your savings upon a deposit at 3% interest, expecting that inflation is going to be different and that the inflation will be exceeding 9%? I don't believe that anybody would venture into that, but correspondingly, the rest of the depositors will do that, and so the remains should be attractive for the banks because they are not going to generate losses intentionally. The important thing, in order for the long-term loans rates to go down, you need to have a predictable inflation, not only right here and now, but for the market to have this faith towards the inflation remaining such over the next 8, 10, 12, 20-year period that a mortgage loan is issued for. So it is of principal importance to us to try and bring inflation down to target as soon as possible, so as to demonstrate that even if the inflation deviates from the target because of the shocks, external restrictions, the central bank brings inflation to target. And I shall remind you, it is something that I frequently mention as an example when anybody is talking about the consequences of non-individualized mortgage lending coming to an end at 8%. Because we approximately had this as a market rate when inflation held around 4% for some time, and the market-based rates were absolutely affordable. So it is very important for us to bring inflation to target. The key rate is going to be close to the neutral one, which would enable the market-based mortgage lending to develop further. Thank you, colleagues. Please, Natalia. Natalia Trushina, the Moscow Komsomolets. My question is this. The problems with arrears and payments have happened not only with China but also with our trading partners, with Arab Emirates, Turkey, and sometimes problems happen with CIS country partners. Particularly, it has become notable after, in December 2023, respective Ministry of U.S. Treasury decision was made. But many months have gone since then, and the problem hasn't been resolved. So my question is, doesn't the Central Bank of Russia plan to somehow solve the problem, particularly since in October there's going to be the BRICS summit taking place in Kazan, in Tatarstan? If it does, what kind of decision it will be? And considering the recent announcement of the launching of the digital ruble or some digital currencies, will they be part of that solution? So how the regulator is planning to come up with something of its own? Is it going to be something like in between China and Iran? Thank you for your question. I understand that the question with the cross-border payments is something that everybody's worried about. Businesses, and without doubt, the ability to find different mechanisms for cross-border payments is in our focus. But because of understandable reason, I cannot be specific here, because I can tell you that we are working with all of the partners, both on a bilateral as well as a multilateral basis, like you've mentioned within the BRICS format. Yes, and there is a good perspective in terms of the utilizing the digital currencies issued by the central banks. We are ready for that, but what is important for us to find mutual understanding with our partners. Next question comes from Dmitry Migalin, Federal Press Information Agency from Sverdlovsk. Experts believe that the biggest risks today that may lead to the massive insolvencies, both amongst big and small businesses, could be unavailability of cheap lending. Do you believe that is the case? Well, thank you very much. No, I shall repeat it again. We do not expect massive insolvency because of unavailability of the cheap money. The quality of the loan services remains to be good. The bad loans share remains very limited at the level of 5%. And not only the share of the so-called bad loans remains low, we also monitor the loan restructuring dynamics. When it is difficult and cumbersome for the companies to service their loans, they ask the banks to restructure them, and the banks quite often meet them halfway. So the share of restructurings is not growing and remains very limited. The share of restructured loans is currently accounts for about 2% of the portfolio. This is the average level since the beginning of 2023, the way it has been. And so watching out for these indicators, we do not see a problem. And the majority of the borrowers do enjoy having a good position. They used to have high profits, and they continue to remain quite high. And the reporting coming from the public companies demonstrates that overall companies preserve financial resilience. Yes, certain problems may happen. That may happen in the case of a company which pursued not a very reasonable policy in specifically over bloating their debt burden. And we're saying that you can definitely resort to the capital market opportunities in order not only to bring in certain raised money and investment, but also capital sources as well. We're coming to the end of our time. Let's have a last question, Irina, in the last row. Yes, thank you very much. Good afternoon, Irina Akhmadullina. Money Doesn't Sleep, a publication. Speaking to private investors, many prefer right now, instead of the stock market, to put money into a bank deposit. So once we come to the cycle of the key rate reduction, there is a risk of the second cycle of inflation taking place, because many money from the bank deposits will be shifting into the real economy to buy certain goods and services. So what's your assessment of potential for such a risk, and do you have any ideas about how to stabilize such a risk? My second question is about the developers market, because we currently observe that the subsidized mortgage has cooled this market down. The developers are currently report on poorer sales. How strong is this segment? How the developers feel in terms of their financial stability, and most importantly, should we, the households, expect prices per square meter to go down? Thank you. As far as your first question is concerned, somehow in the broader debate there's an overhang of savings, that people are saving, the savings are piling up, and so once the key rates go down, all of the savings would simply kind of would blast back into the market. No. I believe that this is something that we could have spoken about during the COVID pandemic in the Western countries, when people were doled out a lot of money, but they couldn't spend it because of various restrictions. So when the restrictions were suspended, this delayed consumption may find a way out into the market. We don't have such a problem. The savings are always there. One can definitely assume that the key rate will dramatically go down in order for these savings to all go into consumption. But that would mean a very unsensible monetary policy, because basically we manage it through our key rate. So we feel that there is no risk like that. We continuously analyze the propensity to save, consumer activity, in order for everything to remain in a balance, so that a relatively low level of inflation would be there. So we don't see such a risk. As far as the developers' risks are concerned, it is another important issue. When analyzing the risks to financial stability, we also analyze the financial status of borrowers and construction companies and developers. To our mind, it is not sufficiently stable. I mean, it can be different in between different companies. There are certain ones who are more stable. There are certain other ones who experience certain problems. But on a general note, the financial status of developers and construction companies is stable, bearing in mind the cushion that has been created because of the good market environment in favor of developers over the previous several years. The housing price is going down. Well, the prices for the housing really have been advancing in terms of growth, and that was one of the consequences of this long-term subsidized mortgage program. So prices are not going to adjust themselves quickly, but in terms of a certain element indicating that this is already happening, we note that in 1/3 of the Russian regions, prices in the primary housing market are already going down. Clearly, the gap in between the primary and the secondary markets remains quite tangible. That would close only step by step. One can't expect it to happen overnight. So we believe it is important to make sure that the well-balanced mortgage growth should lead to the affordability of housing, not the affordability of housing linked to the key rate, but the housing affordability in general. Thank you very much, all the colleagues. Thank you.